Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Hi, Jim, and it's Friday today, and I'm looking forward to the weekend.
Bob, could April be okay for the markets and then look out for May?
I think you got a good one there, Jim. You'll know that our work, we were looking for a rebound in stocks and lower grade bonds and, industrial commodities, all to be favorable out to around March. So we were looking for a good first quarter, and I saw storyline yesterday, something about this best stock market rally in a quarter in about 10 years. So that takes us back to the last high in the stock market. But so you come up with a target, and this was seasonal. You can get a rally in copper out to this time. You can get a rally in crude oil and that sort of stuff. And so let's put it this way, we've made the target. So then you want to say, is it, here's the line. Is it up when it should be? Yeah. Are there signs of speculation? Yeah, there's some high sentiment numbers. There's been some very good momentum numbers. But we want to take a look at crude oil because the S&P trades off of crude, and I think it can go a bit further yet. And then the other one, our memory is that oftentimes in April, you can get some very wild things happening. Sometimes it's base metals, straight up like a couple of years ago. And sometimes it can be some gold mining stocks. I remember something like that in 1996 was incredible. So, we've used the term when it happens, the silly season, where you get these ridiculous spikes up. So that is possible. The other one that's going on is there's these initial private public offerings. We used to call them new issues, IPOs, is brewing up. There's a whole lot of these big funds that are taking things public, and there's quite a demand for new issues. So we may get a new issue market. Well, we are getting a new issue market, and that takes a lot of enthusiasm to accomplish. Also, Jim, it uses up a lot of investor money, too. So, hey, we've made a target, and we think that it can go somewhat further, and but then we got the old saying, sell in May and go away, and everybody knows that. But when you study seasonal trends in many different things, and you see decade after decade where you can get a seasonal turn, and then it happens. So the thing is to, of course, be aware of the seasonal rally, which we are, and then the other is to have the technical tools to measure it and say, hey, this looks like a top. But at the moment we would say that this looks like it's topping, and it could last for some weeks yet. But then the other one to look at is that you can get a change in credit spreads. That's, of course, the difference between high-grade and low-grade bonds, and you can get that. They can be kind of positive often on a seasonal basis. Guess what? Into May. and then they can change. So last year was a very dramatic year in the markets, and we looked after the hit in the first part that we used the term sunshine, and sunshine would prevail through to about middle of the year, which it did, and then in August we said that then it could turn to twilight, which it did, and I said if that happened, then you might even get the scary TV show Twilight Zone in the fall, which we did get. So,
and Bob, the actual Twilight Zone show is coming back?
Well, yeah, and this guy with the big, successful, scary movie, Us, and he has written some stuff, produced other movies based on his impression of those old original Twilight Zone TV shows with Rod Serling, who wrote, I guess, and directed them as well. So, do. And so let's enjoy the positive while we can, and let's keep in mind that Mother Nature is giving us another chance to raise liquidity when we're in market conditions whereby at some time, maybe after mid-year, that liquidity can disappear, which was also our concern last week. So let's focus on liquidity.
We'll have more with Bob Hoye right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol AESDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Bob Hoye. Bob, is there concern for food supplies because of the massive flooding in the U.S. Midwest this spring?
Oh, yeah, they've had headlines about that, but the grain prices are not going up. There's also serious damage being done. You've had extreme cold late, then a fast melt, and the ground's frozen, so it's not absorbing moisture, and it runs. This is going to be an incredible setup for Winnipeg, which, of course, is on the Red River, which flows north. So it's melting to the south, and it's still frozen north, so that then can do a flood. But the grain prices are not moving, so it's going to be hardship to those people afflicted by it. I guess there'll be all kinds of insurance things come in. There's been hundreds of thousands of cattle lost, calves and whatnot. And actually, I looked it up, and it reminded of a winter. I remember reading about cattle raising in the late 1900s, and I think it was the winter 1886, 1887. There was horrendous cold and blizzards, and literally millions of cattle didn't make it through the winter, and bad weather happens, and this is a case of bad weather. You feel for the people who are directly afflicted by it, but as I said, Jim, there's no movement in the grain prices. I haven't looked at cattle prices, but I think I should maybe later on today.
And of course, we have the political winds with China canceling Canadian canola orders, billions of dollars worth. Is that going to depress that market and drive prices down?
Well, I don't know about that one, Jim. There is, of course, these grain prices are international, and they're not moving at the moment. So this is not to say they won't, because you have yet, nobody's even talking about planting, and the flood may not have crested yet, depending on what area you're in, but it's an exceptional one. But so far, nothing dramatic in the prices, so we'll just watch and see how it goes. Also, the media and financial journals, whatnot, the commodity guys are getting all worked up about commodities. This is it. They're finally going to get the big boom in commodities, and it's the old recipe where the Fed is reckless and they're going to depreciate the dollar and commodities are going to go up. But this has been the inflation that they're looking for, and in their minds, inflation is only rising prices for goods and services. But people really don't understand inflation in financial assets. And this is where the game has been. You've had, like, just the bond market really peaked out, the high-grade market peaked out in 2016. But the rally that was on in bonds was the equivalent of gold going to 10,000. So there's where the inflation in prices was in financial assets. And the theme has been, through 300 years of history, you have a long expansion in economic expansion, culminates in a fabulous global boom in commodities like 1920. You get a hard crash in commodities. Then you get a financial bubble. So the folks go from hoarding tangible assets to then hoarding financial assets. It's not run by the central bankers or policymakers. The public makes the markets. And then once the great bubble is over, the financial bubble is over, in every case it's been followed by a long financial contraction, deflation, where the public chooses to hoard cash because cash is going up in purchasing power, which is another way of saying deflation. So who am I to say that suddenly history is going to get different? And the pattern has been inflation in tangible assets, hoarding real things, then inflation in financial assets, and that's hoarding of paper things, if you will, and then the hoarding of cash. But where this works with gold, Jim, is that gold is cash. And in the post-bubble contractions in the past, the big game has been in the gold sector, where the gold's real price goes up, production goes up, mining companies make money, and shareholders of mining companies make money as well. Stocks go up. So the important thing is not so much the price in U.S. dollars for gold, but what the real price is doing adjusted for inflation. And that price, the real price of gold, effectively built a base as the bubble was concluding in 2018. And this year it's been moving up. It needs a breakout, which when they update the figures, because this thing's only plotted monthly, but it has broken the long downtrend line that was on since 2011. So the real gold market is actually going our way, but not yet exciting. So, but it will become exciting, I'm sure.
We'll have more with Bob Hoye right after the break.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, we've had our annual refinery fire and explosion, this time in the Houston area. So every spring when they say they're rejigging the plants and doing maintenance, that's the reason for jacking up gasoline prices. And then, of course, we have our annual explosion and fire at some refinery somewhere in North America. Not that I'm saying there's a conspiracy here. But, Bob, apart from what we pay at the pump, what about the price of oil itself?
Yeah, crude itself, West Texas Intermediate, probably favorable through into April. It would be nice to get a nice spurt up where you can get some technical readings on it. But, that. And then the other thing is, you've got your seasonal driving patterns in North America where the demand for gasoline often peaks in May. At least the price does, the demand, because they're booking ahead for what motorists will use during the early part of the summer. So crude oil, okay, but we don't like to see gasoline prices going up. And of course in Vancouver, I think you got the highest gasoline prices in North America. And a good part of that is taxation. We should be much lower prices, and when you hear the price difference relative to just south of the border in Washington State, where it may be $1.40 in parts of Vancouver, and it'll be the equivalent of $1 just south on the border. So, Canadians are like too much big government, and with big government you always have a cost, and the cost will be buried in various places, and it has to be paid for. So my guess is, and without any serious analysis on it, Jim, but in any station in life, it costs about 25% more to be a Canadian than the equivalent in the U.S. And one thing about the Harper government under the Conservatives is that that was one of their platforms, was to get the cost of things, consumer things, down in Canada for the taxpayer, the consumer, and everything else. And of course, then the last federal election, the Liberals won, and it is increased the cost of everything. Deny pipelines, so the revenues from oil taxation are not there. It's been a pretty evil process. However, even before the scandal broke, what was it, 6 weeks ago, the view I had was that the Liberals can lose the general election in October. And then with the dimensions of the scandal on trying to influence the justice minister, this is a serious scandal. And the handling of it by the Liberals has not been good. And so it continues they can't make it disappear, which is remarkable. So that will continue. So it looks like the Liberals could Liberals could lose, and the Conservatives would win, in which case you would get policies back such as with the previous Conservative government, the notion of that government ambition should be limited, and that government costs should be limited, and also government in your face should be limited as well. So this, of course, is the popular uprising that's going on in many parts of the Western world, whereby people are looking at an incredibly imposing governments and their costs, and beginning to say, hey, this doesn't make any sense. I'm out of here, and we're going to try and reduce your influence. And it's a worthwhile development, and it's I'm calling it actually beyond popular uprisings, a great reformation, early stages, and I think it'll continue to advance. The ordinary common sense is coming into play.
Also, where the government has missed out in billions in revenue is a very poor rollout of legal pot. There's only a handful of legal stores in British Columbia where you think they would be all set to go when it was announced to be legal back in October. Ontario won't have any legal pot stores until April, and then only 25 for the whole province.
Yeah, well, the bureaucrats are restricting it. It was supposed to be a new business, but no, public is getting smarter, and maybe that's not the right word. The word is practical common sense. And they're going to look at how well the governing classes are living. They've got all the perks. They fly here, they fly there, expense accounts like you wouldn't believe. And they're going to look at the promises that the governing classes are making, that all is wonderful. And they're going to realize, hey, I'm not on the winning side of this deal. And when you take a look at actual numbers in the U.S., where you take the average take-home pay and deflate it by the Consumer Price Index, and there's been a slight decline in average take-home pay over the last 25 years. Now, prior to that, because the government burden was less, and you had industry doing its magic of increasing productivity, people are increasing productivity. You didn't even have to have a wage increase, but if you had a 3% increase in productivity, the equivalent in cost of living went your way. So, and there was less intrusion. So coming out of the 1940s, the productivity increased tremendously, and everybody was getting a good pay. But the last 25, 30 years, the government is taking so much of it and obscuring everything so that the take-home pay in 25 years has decreased a little, which is absolutely absurd. And that's using U.S. numbers, much bigger statistics and stuff, more reliable. And the public may not have that tribal memory, but they know that they're not getting a good deal, and they're prepared to act on their own behalf, which is a good thing. So, hey, Jim, it's great to be vertical, and it's great to be alive. No, I'm going to use the word alert. It's great to be alert.
Thank you. Yeah, if you're on life support, maybe not so much fun.
Yeah. Vertical and alert. That's the saying. So,
Bob, thank you so much for being on the show.
Hey, good to be with you, and looking forward to next week.
My guest has been market historian Bob Hoye, the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, you can send them to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.